Good afternoon. Thanks for joining us and welcome to the President's Task Force on Education, Outreach, and Engagement live stream seminar on taxes and the performing artist. The presentation will begin momentarily. If you have any questions that you would like to direct to today's guests, please email them to pteoe@sagaftra.org. That's pteoe@sagaftra.org. Now, please welcome today's host, SAG-AFTRA President Gabrielle Carteris.
Thank you, Pam. Hi, everybody. Welcome. That's pretty impressive. I think we have almost 1,000 people joining us, and they'll continue joining through the seminar, so that's great. I want to first, before I begin and say anything, say that I hope that you're all safe and doing well, staying at home, staying healthy. We're thinking about you. As this global pandemic moves into its 8th week, which is unbelievable. I can't believe it's actually been 8 weeks. And we continue to shelter at home. I'm so proud that the union is able to create these opportunities to hear from experts on important topics. So as you know, the federal government delayed the income tax filing date from its normal date of April 15th to July 15th. And that's actually a welcome extension for a lot of us. But it's going to be here before we know it. So we're really thrilled to have a chance to share some knowledge with you today on how to file. As I think most of you know, we're in negotiations for our TV theatrical contract right now. So I'm not going to be able to stay throughout the whole presentation, but I did want to check in to say hello. I also, before I go further, want to take a moment to thank all of the staff who make these presentations possible. And I want to also welcome and recognize SAG-AFTRA Executive Vice President Rebecca Damon. She's going to take over as your host when I leave, and Chief Operating Officer and General Counsel Duncan Crabtree Ireland, who will be moderating the question and answer portion of this webinar. So I am thrilled to introduce today's presenter because she is Sandra Karas, a working actor, a member of SAG-AFTRA, and of Equity as well. She's also actually the Secretary Treasurer of Equity and is an attorney in private practice focusing on the areas of tax, estates, trust, contracts, and business law. Sandra also serves as the site coordinator of the Volunteer Income Tax Assistance VITA. It's a program out of New York, which she has been affiliated with as a pro bono tax preparer and instructor for more than 30 years. She holds licenses in the areas of tax accounting, securities, investments, and law, and is admitted to practice in all New York State courts, as well as the Federal District Court, United States Tax Court, and the United States Supreme Court. She's just a slacker, not really. She's really impressive, the work that she does. Please welcome, without further ado, Sandra Karas.
Thank you, Gabrielle. I'm really pleased and happy to be here, to be with all of you. I know we're all sheltering at home, but we're sort of sheltering together. You know, we link our virtual arms. And I want to thank the SAG-AFTRA team. They're wonderful to connect all of us and to be able to allow us to talk about these important topics. So thanks very much. Today, we're going to try to get through a number of things that are going to affect all of us in the next couple of months and beyond. Our outline says that I'm going to cover a couple of items on the CARES Act that I know some of which you already know and some of which you've already had seminars about. And then I'm going to get to what you do about filing your taxes during this sheltering period that we're all going through right now. We're going to go through some worksheets and talk about what's deductible, what's still deductible, and how it might affect you and your tax returns. And then we'll get to some questions and answers. And I want to say that if we don't get to all of your questions and answers today, because we've got so many people online, I'm very excited about it, that you can email your questions to PTEOE, that stands for President's Task Force on Education, Outreach, and Engagement, PTEOE@SAGAFTRA.org. So if we don't get to your questions today, don't hesitate to contact us by email and we'll get answers back to you as soon as we can. You know, like you, I love my union. I can't thank us all enough for being together in solidarity, especially during this time. We've all been, you know, trying to figure out how we're going to make ends meet. And I've been getting some residual checks directly deposited. Thank you, SAG-AFTRA. I got one for 89 cents the other day. So I just have to say, I'm loving this. I'm loving all of you. And we keep going together, but we've got our union behind us. So let's launch into some of this CARES Act. You know, we've heard all about the stimulus payments and all of that, and some of you know some of what's going on. We'll go to the next slide and start looking at how this came about. It was the end of March when legislation was signed into law as a direct response to what everybody's going through with the COVID-19 crisis. It's called the Coronavirus Aid, Relief, and Economic Stimulus Act. And it's for all of us as individuals, and there's also some money for businesses, small and large. We can talk about all of that at another time, but we'll take the next slide and look at how this has been able to affect some of us in positive ways. Our retirement accounts can be accessed now in ways that we couldn't access them before. Many of you know that if you want to take money out of your retirement accounts before you're 59 and a half, you usually have to pay a penalty. And those retirement accounts can be your 401k, 403b, individual retirement arrangements, IRAs, and the like. We'll go to the next slide, and we'll see that we have penalty-free distributions from these retirement accounts. So if you need this money and you have a hardship that's related to coronavirus, either you or your family, you've had a furlough or a layoff from work, you've lost your job, you yourself or a family member has become sick, or you have to care for someone. There's almost no situation I can think of in which most of us haven't been affected by this virus. If you need to take money out, you can take it out without paying the penalty. And that penalty is usually 10% on your tax return. For those of you who've already done this, you probably are familiar with that. But you will have to pay the tax on it unless, and we'll go to the next slide, and we'll see that you can, if you don't want to just take it out, spend it and not give it back, you can take a loan against your retirement monies for the same reasons. And so if you want to take a loan out, you can borrow against your 401k. And if you're willing to pay it back within 3 years, you don't have to pay any tax on it. For those of you who decide to pay the tax on it, you're going to be you can elect to repay that within 3 years as well. So you've got a lot of flexibility with accessing your retirement monies. We'll go to the next slide. Thank you. For those of you who are taking distributions from your retirement plans because you're over 70 and a half and you know you have these things called RMDs, required minimum distributions, those are suspended this year. You don't have to take that money out. So if you don't need to pull money from your retirement accounts, you don't have to this year. There's no requirement. And the government has done that for a couple of reasons. The most important of which is that because many of your accounts have lost some value this year, although a lot of them are gaining most of that value back, and we hope that that continues to improve over the next months and maybe a year or two. You can leave that money where it is this year, and you don't have to take it out and pay tax on it. And you can allow some of your retirement monies to recoup some of the losses that they've incurred recently. Next slide, please. So these Economic Recovery Act payments, you've already heard about them. They call them the stimulus checks. If you are single, you may qualify for a $1,200 payment. If you're married, filing separately, you may qualify for up to $2,400. And you have to have a social security number, and you're affected by your adjusted gross income. So let's look at the adjusted gross income on the next slide. And here they are. We have for single people, $75,000, for head of household, $112,500, and for married couples filing joint returns, up to $150,000 will get you these stimulus payments. If your income exceeds those, There are some smaller amounts and they phase out as your income goes up. And you can check on the website for that. Next slide, please. And this is the same information showing you the phase out amounts. And by the way, all of this is available to be found on the IRS website. And that website address is coming up in another slide, but I'll give it to you now, www.irs.gov. So if you have any questions about any of these payments, you can get lots of information on the website. Next slide, please. Thank you. So who can get these stimulus payments? Well, you can get them if you're retired, if you're on Social Security, if you have railroad retirement, disability or veterans benefits, and even taxpayers who don't make enough money to usually file tax returns can qualify for these stimulus payments. Again, the website has lots of really good information about this. So if you have questions, you can go on the website and get lots of detail. Next slide, please. There is the website address for you, irs.gov/coronavirus/get-my-payments. And you can check and see how you can apply for, whether you're eligible, and what you need to do if you don't file a tax return. Next slide, please. And I just said, yeah, if you don't have to file a tax return, go on the website. There are lots of frequently asked questions. Almost anything you can anticipate is answered on that website. It's really, really very good. Sometimes people have a little difficulty getting the information about their particular stimulus payment because they have entered their address in a way that the IRS doesn't recognize. So there's some FAQs about that as well. But they've been issuing them for a couple of weeks now, and they plan on issuing stimulus checks all the way through the end of August. So if you haven't gotten yours, it doesn't mean you don't qualify. It just means they haven't gotten to you yet, and or you might not have your tax returns filed yet, and they're using last year's and this year's tax returns to calculate your payments. Next slide, please. And as Gabrielle said, we have an extension this year, not only an extension to file our returns till the middle of July, but an extension to pay our taxes. And that's a pretty good thing, because sometimes you get extensions and you say, oh yeah, but I have to pay the tax, you know, when I file the extension. Well, that's still true this year. However, that has been delayed to July 15th. So if you owe tax, you have until July 15th to pay it. If you think you want to file an extension beyond that so that you can file your taxes up to October 15th, you'll still have to pay your tax by July, but you'll have until October to get your tax return actually filed. Next slide, please. As I said, you can defer your federal income tax payments without penalties or interest, regardless of how much you owe. This deferment on the filing and the payment of tax applies to all kinds of tax filers, not just individuals. Next slide, please. Now, if you are looking for help on filing your taxes, because you are in a situation where you either don't have your own tax preparer or your tax preparer can't help you remotely, most of them do, but many of them don't, or you've been doing your own taxes and kind of looking around and trying to figure out what to do, the IRS has what I think is really the best program for self-filers. Because it's free and it's not beholden to any one particular tax software company. Your federal government is giving you the opportunity to file your taxes on your own for nothing. It's called Free File, and you can find it on the IRS website. Again, you go to irs.gov and you type in the search box Free File, or I think there might even be a link with some kind of a little symbol that takes you automatically to Free File. But if you don't see it right away, just type in Free File in the search box and you will find a a program that allows you to do your own tax returns. I know you're feeling really scared about this, but we're going to keep talking about it. Next slide, please. So what do you need? Well, you need to have last year's tax return handy. You need to have a valid Social Security number, and you need to have Social Security numbers for anyone who is named on your tax return. So if you have a spouse, if you have dependents, such as children or parents or relatives or friends that you are supporting who live with you, all those people have to be put on your tax return. Next slide, please. And to get started, you'll need your income, your receipts, your Social Security benefits, unemployment comp, any receipts pertaining to a small business if you have one. If you are a landlord, you'll need your rental, your real estate, if you make a living from royalties, partnerships, S corporations, or trusts. Next slide, please. And what other income do you have? Well, you know the familiar W-2s showing your wages, 1099 interest forms, 1099-G for government forms that show your refunds, 1099 div for dividends, and 1099-R for any retirement benefits. Next slide, please. If you're one of those people who purchased your health insurance this year under the Affordable Care Act on what they call the marketplace, you're also going to need to complete your tax returns, the Form 1095-A, because it shows what your insurance program was in the marketplace. It names the name of the company that you engaged and to which you paid your premium every month. It shows how much subsidy the government might have given you depending on your income. It lays it all out on a form, and all of that information has to be included with your taxes. So don't forget to pull that if you're one of these people who has purchased your health insurance on the marketplace. There's also a form, an 8962, that will calculate the difference in your premium tax credit. If you gave them the right amount of income, they should have given you the right amount of subsidy. If for some reason those two things don't agree with each other, there will be a reconciliation of it on this 8962 form. And next slide, please. So if you're going to file electronically and you want to do that with Free File or with any preparer you use, go to the IRS website and you have to verify your identity using your 2018 AGI. That means adjusted gross income. If you have a personal identification number, if you've already created some kind of an account in the IRS, you know who you are and you'll have that number. But you can create an account and set up an account and a profile on the IRS to help you get information that you might need to have if you don't have all of your information from last year. Next slide, please. What if you don't have last year's tax return and you don't know where it is and you don't know how to get it and you don't know where to start? You can get, anybody can get a transcript of your last year's taxes. It'll show all of your income, or it'll show exactly what you filed. It's called a tax return transcript. And you can also get that at irs.gov. So even if you've lost everything, or if you've moved, or something is in storage, don't despair, because you'll be able to get all of this information from the IRS. Now, you can't go back and get it 8, 9, 10 years ago, but they usually keep things for about 7 years accessible on the website, and they will send you a copy of your transcript. I am told that they're doing all of this online now. Sometimes they used to just insist that you get it by mail, but because of the COVID restrictions and because so many IRS employees are working remotely now, they are limiting what you can get to just online access. And so for most of you, that'll be very, very helpful. For those of you who prefer snail mail, I'm afraid you're going to have to do with the online service. Next slide. Thank you. So, and then as I said here, that you'll select the tax return transcript. You'll ask for the adjusted gross income, and that'll give you the information you need to go forward and use the free file. Next slide, please. Oh, yes. Once you have walked yourself through the free file process, you'll want to make sure that you know that your tax return was accepted electronically by the IRS. So you will have to provide your own email address to get that information. This is information about you that you're giving to this third-party carrier through the US Treasury, but rest assured that it is protected. I've been an e-filer for almost 30 years now, and I have never had any problem. Nobody I know has ever had any problem with using the transmitters to the US Treasury computers with any hacking or any invasion of people's personal information. I know people always ask me that question, is this going to expose me to some kind of risk? I can tell you from personal experience or from everything I've learned that providing an email address and getting this acknowledgement with your electronically filed tax returns is secure, and we expect it to stay that way for quite some time. Next slide, please. While we're at it, I know a lot of you are going to say, well, who do I go to if I'm too afraid to do this myself and I want to get my taxes done by some professional? Well, we can't recommend any professionals, and this would be a good time for me to insert that I want to remind all of you that this seminar today, what we're doing together through the union, our union, is to help one another, but it's not here to provide individual legal advice, accounting advice, or financial advice to any of you personally, because of course we don't know your situations. This is general information that I hope and that SAG-AFTRA hopes will help us all navigate things and be able to find information so we can help ourselves. So with that, I will go into this slide and say we can't also recommend any professional tax preparation providers because we can't refer you to anyone in particular. However, there are a lot of outfits out there that offer free or low-cost self-filing. What this means is that they will let you access their software for basic returns at absolutely no cost. And sometimes they will add costs to this service depending on what you're trying to do for yourself. So some forms and schedules are not included with the basic free service. Some extra states are not included. I was sitting with a young man at VITA the other day who paid $300 for a free tax return from a software company that shall remain nameless because he was not allowed to print it out without paying a fee. All he wanted to do was print out his tax return. So I can't tell you anything about all these providers. They're out there. So be aware that if they say it's a free service, it might not be entirely free. So that's all we can tell you about that, but there are lots of them out there. If I were going to do this on my own, I'd go to the IRS free file. That's your government providing it to you completely free of charge. Next slide, please. So people always say, well, I'm just too daunted by this. I don't want to do it. What if I just don't do anything? I don't have to file my tax returns for a while. Well, next slide. What happens if I don't do anything? It's important that you file your personal income tax returns every year. Next. And why is that? Well, one of the big reasons is, what if you're due a refund? You can't get the refund unless you file the tax return. And it has to be timely filed, which in IRS parlance is it has to be within the last 3 years of your due date. It has to be within the last 3 years that will close out this year, which means you can go back to 2016 to claim refunds. Now, most of you have filed your 2016 and even 17 and even 18 tax returns by now, but many of you haven't for various reasons. We find ourselves in situations where we have a family crisis, a work crisis, we're touring, we're on the road, we have moved, we've got documents in storage, we know where to begin, and then we become paralyzed and we don't do anything for several years. Some of us are going through any number of personal or professional adjustments and transitions, and we just can't get it together. Don't beat yourself up, but do file at least within 3 years so that you don't lose refunds. So for those of you who have not filed 2016, you have until July 15th of this year because of the additional extension, and you can get those refunds. If you are one of those people, make sure you file this return by certified mail so that you have a mailing receipt and a proof of mailing so that they can't suggest later that you didn't get it in a timely fashion. Next slide, please. Well, you know, for those who don't get refunds and you owe money, another good reason to file as soon as possible is to find out, first of all, how much you owe and to reduce any penalties that you would have for late filing, late payment, and the interest that is also added on to those. And if you want special consideration for taxes that you owe from this year or prior years, you have to become a current filer for them to even consider any consideration, especially for you, on any repayments, penalty abatements, any reduction in tax, or another arrangement such as an installment agreement. They won't even consider any of them until you're current with your filing. And what that means is that for 2019, yes, you have until July 15th, so we've got a little wiggle room there. But if you want consideration on anything prior to 2019, you have to be current with your taxes. So I always encourage people, file as soon as possible, even if you think you owe money. It's good to have a handle on it as soon as possible. Next slide. What if you are looking to move? And many of you might be changing your residence status given this crisis we're in. Some of you are, you know, moving in with other people, maybe with family members, giving up leases, finding new leases. If you need to qualify for housing, a subsidy, you're purchasing a new home, you're renting a new place, they're going to need 2 years worth of tax returns. You don't want to be one of those people who all of a sudden at the last minute is scrounging to find an accountant. Keep your tax returns current so that you don't find yourself in a situation where you're not going to have returns when you need them. Next. Many of you are going back to school or want to go back to school, and you're going to be getting lots of subsidies, maybe scholarships, especially if your income is low or modest, and you're going to need verification of income. Again, they need to see the 1040. That's the first thing they'll ask for on all of those applications is what's your adjusted gross income for this year and the prior year. They usually look at a couple of years, but they want the most recent if you can get it. And if you qualify for loans, grants, scholarships, or any other subsidies or benefits, you want to make sure that you have your taxes caught up. Next. And of course, last but not least, the stimulus payment. You know, I've heard from lots and lots and lots of people who haven't filed their 18 returns yet. And, you know, they're really afraid they're not going to qualify for stimulus. And I would agree. If your 2018 return is not on file, you will not be considered for a stimulus payment. So make sure you get your 18 on file and your 19 caught up if you can, because they will use whichever one you want them to use. If the 19 is a better number for you, if your income is a little lower, maybe that's the one you want considered. So make sure that you are current filer if you want to be considered for the stimulus payment. Next. And then you're saying to yourself, all right, so she's convinced me I've got to get something on file, but what if I try to do this and I'm just, you know, make a total mess of it? Don't worry. Next. People make mistakes. And this is a really tough time for all of us. We're trying to do the best we can to find services and products and food delivery and, you know, Zoom parties and everything that we can do just to stay connected and to stay healthy. And sometimes things like professional services like tax preparation, you're thinking, well, I don't know, I can't find anyone, I can't afford anyone, I'm just going to do my own. I know it's a lot of work to ask you to do, but in helping you get organized, I hope that this seminar today helps you do that. Whatever you get on file for yourself, if you do use the free file or your own efforts through whatever kind of software you prefer to use, the IRS and states allow you to change those returns later if you've made mistakes, if you've forgotten to include income, if you've overlooked some expenses, deductions. We had somebody walk into the VITA office once and they said, "We forgot to tell you about the baby." Oops. Well, we amended the return to include the dependent child. Those things are easy to forget. I know you're laughing, but it happens. It happens all the time. A W-2, an errant W-2 comes in 3 months later and you say, uh-oh, I didn't include this. Or I forgot an entire expense, few expenses that I had. Oh my gosh, how could I forget that? That's what amended returns are for, and you shouldn't be afraid to do those. We don't recommend you do them every year, but in this year, my advice is to get something on file as best as you can and worry about trying to fix it later in the year if you think that you've made mistakes. And you can consult a professional when you do so, or come into the VITA office if you have one near you, or consult with us, or just contact the union. They'll get you in touch with us. We'll be happy to help. Next slide, please. So I'm just kind of repeating myself here. Get your income, deductions, expenses, dependents, and other information reported and filed as best as you can and as soon as you are able. And this will make sure that you have an official, and I put application in quotes, because your tax return is your application for the stimulus payment. That's what it is. In lieu of anything else, that's what it is. And so if you want to be considered for stimulus, you want to make sure to get your taxes filed. And if there are errata on your returns, seek an amendment. We do them at VITA all the time. Next. This is redundant. I just said it. So use the free file, do the best you can, and seek help if you need making an amendment. Next. For those people who don't think they're eligible for a stimulus check because their incomes exceed those earlier thresholds that we showed you, that's okay. And if you haven't gotten a hold of any tax preparer, or your accountant is too busy, or everybody's pulling their hair out during this very unusual and unprecedented time, you can file an extension form to give yourself time until October 15th to get your tax returns in. The IRS has Form 4868, and most states have an equivalent form. That'll give you until October 15th to get your 2019 returns filed. Next. I've already told you about that you should make sure you get caught up, but if you haven't been caught up this year and you want to get your refunds, do your 2016 tax returns first. Get those in by July 15th, and then you can worry about the others. Next. Thank you. Well, many of you are, we're just gathering from all over the country here. This is very exciting. And so we've put together a list and website contact information for the states that have income taxes. And that's on the very next slide. Thank you. And there they are. I know they're a little, well, on my computer, they look a little small. I don't know how they look on yours, but you can look up your own individual home state, use the websites that are listed here. They are accurate. And if they're not, it's my fault. It's nobody else's fault. I put this together. So they should be accurate. And you can find out if there are any special rules to make sure that you have until July 15th to file your personal tax returns. if there's anything going on that's unusual about the stimulus payments or anything else. And I will tell you that your stimulus checks, except in rare circumstances in the states, and there are a couple of states that are still sort of debating about the taxation of these, which is why I put these websites up for you. Your stimulus payment is not taxable income. Your stimulus payment is not taxable income. But check with your own home state to make sure your state does comport with this. Most of them do, with very few exceptions. But I've been reading a few different bulletins lately, and there's Missouri was going to change its rule and make it non-taxable, but it was trying to figure out how to do it. You know, I don't want to go into any detail now because I don't even know all of the details. I just want to give you this information so you can check with your home state. But your federal stimulus payment is not taxable income. Next slide. And these are the states you already know if you live here that have no state income tax at all, and you don't have to look up anything. Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. Next slide. And now we get into the checklist, how to prepare your own documents to get your taxes done or to do them yourself. And the worksheets that we're going to go through, these next 4 slides, are going to be worksheets that, as you'll see, we use at VITA. They say Volunteer Income Tax Assistance 2019. So these are ones we use at VITA, but I will tell you, they are usable anywhere by any tax preparer. In fact, we've gotten calls at VITA saying, you know, God, these are great. You know, my clients like these. Do you mind if I use them? We say, no, we don't mind, you know, because they help you organize. They're very good organizational tools. And this checklist is the way to begin. So let's go through it together. On the left-hand side is income. On the right-hand side are deductions and expenses. If there's extraneous information here that refers to bringing things into the VITA office and so on and so forth, please just ignore those because we use these with members who make use of the free program. So on the income side, we've gone through a little bit of this in the free file section. You have to gather your W-2 forms, and you know what those are, your wage and tax statements. And I suggest that you go through all of your back pay stubs if you've saved them so that you can anticipate knowing how many W-2 forms you're supposed to get. Some of your payers will not provide a paper W-2. They want you to access an online profile that they've created as you were working probably, and you were looking at your pay stubs. I know I have some employers that do that, and I'll go online at the end of the year and get my W-2. But some of them will be redundant. They'll give you your W-2 online and they'll mail you a hard copy. So if you haven't gotten one yet, use your online profile for that particular employer and make sure that you're, that you've got their final W-2 form. All the various 1099 forms. We talked about some of these briefly, but INT stands for interest earned. DIV stands for dividends earned from your investments and the like. 1099G will tell you, we want to go, yes, thank you. The 1099G will tell you about your refunds from last year and unemployment compensation. Don't forget, unemployment compensation is taxable, including this special unemployment arrangements that is as a result of COVID. You can get your state unemployment, and there is the $600 federal bump, as some people are calling it, for the coronavirus relief. That combines to give some people as much as $1,100 a week in unemployment compensation. Bear in mind, this is all taxable income, every single bit of it. Now, there are some states that do not tax unemployment under any circumstances. You probably already know if you reside in one of those states that your unemployment is not taxable. But I would refer you back to the state website lists for your own state and check and see if unemployment is on the usual list of taxable income. I can think of one offhand. New Jersey does not tax unemployment. It just happens to be one I can think of off the top of my head, but there are a few. However, in most states and on all federal claims, unemployment is taxable. So be aware of that. 1099B stands for broker and barter. For those of you who trade securities, investments, stocks, bonds, mutual funds, and the like, you know who you are. You'll get statements that have a 1099B on it. 1099 miscellaneous, you all know that form because we get it when we do independent contractor work, freelance work. You know, sometimes it's books on tape. It's almost always print work. It's various one-offs. It's, you know, maybe a workshop of some kind. It's a transportation allowance if you're participating in something. So you might get these 1099 miscellaneous forms. Royalties also come on 1099 miscellaneous. You should be looking for those if you collect royalty checks, and many of you do. I got one this year. 1099R stands for pension and retirement. If you are pensioned, if you have any retirement income from either your union pensions, your own personal IRAs, your 401ks, any of that, and you're drawing on that money, you're going to get a 1099R at the end of the year. And last but not least in the 1099s is the SSA, stands for Social Security Administration. For those of you who are collecting Social Security, you get that pink and white form every year. You know who you are and you know what it looks like, but be looking for that and gather that for your taxes. Alimony is still taxable for those whose divorces occurred before December 31st, 2018, and had those arrangements in their divorce decrees. We don't see them really very much, but for those of you who do have it, you know who you are. Make sure you include that. Prize winnings, lottery winnings, jury pay, election inspector, were you a poll watcher? All those little dribs and drabs, and some of them are big dribs and drabs if you've won a lot of money, are taxable income and have to be reported on your tax return. Don't forget about those. Make a list of them, organize them for yourself or your tax preparer. And scholarships, awards, and honoraria are not usually taxable if they are used for the tuition and fees for which they are granted. But if they are not used for those purposes, and that's not typical, but we do see it sometimes, then that money might be taxable. However, if you're going to school and you're getting a scholarship for the school and you apply it against your tuition, which almost always happens, there's no taxation on any of that. I know some people worry about it, but you shouldn't. But know about it, organize it, and make sure that you have your tuition statement that will reflect that. And I say all other income, whether we've listed it here or not, sometimes we see something that comes along that, you know, an anti-discrimination award, personal injury award. There are things that happen sometimes through legal proceedings that might affect you. Organize it. Very often it's not going to be taxable. However, your preparer should know about it so that he or she can determine whether or not it's includable. And ignore this next thing because that's another worksheet that has to do with VITA only. It's called a gross income worksheet. At the bottom of this column, we have direct deposit or direct debit. We highly recommend that you do all of your money transactions with the federal government through your bank accounts. And again, I will tell you, in all of my years, I mean, I've been electronically filing for, I want to say, I'm embarrassed, 30 years. And I've never had a problem with a bank account, not once. I'm very thorough, I'm very careful, but you know, we take great pains at VITA, and I'm sure your accountants do too. So you may use the direct debit or the direct deposit for receiving your refunds or paying your taxes to the extent that you're comfortable. Remember, those of you who collect Social Security, you get a direct deposit every month because the government insists on it. It's safer, it's more secure, and it's certainly faster. So that's the end of that column. We get over to the right-hand column. We look at deductions and expenses. And I know what you're saying before we even get to it. I know you're saying, but Sandra, nothing's deductible anymore. They've been so mean to us. Yes, it's true. Some things have been lost by the wayside. We're going to talk about that in a minute, but there are still some things that if you itemize your deductions, and by itemizing, the government has a few specific categories of what you're allowed to itemize. And one of them is medical expenses. To the extent that your insurance and your medical costs and other medical expenses exceed 7.5% of your income, you can throw them onto the pile of expenses. I know that can seem like a big number, and very often it is. For those of you who are very healthy and have very few expenses and don't need to see a doctor and have all of your insurance provided for by an employer or by your union, then you probably don't have anything in this category. But there are some people who do have medical expenses and people who buy their own insurance and have to take care of things that are out of pocket. The government says, yes, add these up. So we have medical and dental insurance. And notice I have, if you're on the marketplace exchange, you must have that 1095A. Pull that out if you're one of those people. If you carry long-term care insurance, you want to make sure that you have that amount, because not only are there special credits federally, but there are special credits in your state in some cases. And you'd look that up in your state if you like. And then anything out of pocket, co-pays, something that's not covered, a deductible amount, and so on, would be your medical costs, including transportation. Don't overlook that. Are you charitably minded? Many of us are. And don't forget your foundation when you're thinking about charities. I'm sorry, I'm putting a little plug in for the foundation. Charitable contributions by cash, check, or credit card are still deductible. Get a receipt. Charitable contributions in goods, if you're cleaning out your closets, and boy, are a lot of people doing that now. Lots of people are doing it. It's a good time to do it and pass information along, goods and items along to people who can use your items that you can no longer use. It's a great thing to do, and it makes us feel good about cleaning out our closets. Make sure you get a receipt from the Goodwill or the Rescue Mission or whomever you're giving it to, and keep that receipt with your tax documents. If you pay a mortgage on your property, that is still deductible up to a value of $750,000 of borrowed money. Real estate taxes, school taxes, and town and county taxes are deductible. Let's see, child and dependent care costs. If you work or look for work and you have to pay someone to take care of your dependent or your child, whether it's in your home or outside your home, those costs are deductible. Make sure you get a receipt for it, because they can yield really valuable credits for people. And alimony paid. Remember what I said, the alimony received by people whose divorces were before December 31, 2018. Well, those who pay it get to deduct it. So again, you know who you are. If you receive it and it's taxable, you have to pay tax on it. If you pay it, it's deductible and you get to reduce your income by it. Again, we don't see this very often, but it still exists, so we add it to the list. Do you contribute to your own retirement plan? Any kind of a retirement plan, an IRA, a Roth, a simplified employee pension contribution? Do you have a solo 401k that you've established? Those of you who have corporations might have retirement plans that run parallel to those that you have through the union. You should keep track of those. Your rent paid. Many states have rent credits that can be valuable and can reduce your tax. So we always ask, how much rent did you pay? And there are some questions. You usually have to provide the address, sometimes the landlord's name and telephone number, and any, different information depending on the state that you're claiming the credit in. But they can be very valuable, so don't overlook that. And then we're going to get into business and auto expenses and travel expenses on our next worksheets. But before we get there, I just want to say that if you're still paying expenses for investment advisors, while your employee business expenses and travel expenses and payments to investment advisors are no longer deductible on the federal return, they may be deductible on your state return. So organize all of these expenses and we'll talk about how we might be able to deduct them. New York and a number of other states still take the old itemized deductions and allow them on the returns. So those investment fees can still be deductible on a state return, even though they're not deductible on a federal return. Where else are we here? College tuition and student loan interest. That was a big fight at the end of 2017, but they were preserved. Both the credits for paying college tuition for undergraduate and graduate degrees, and also the student loan interest after you graduate are still allowed as either credits or deductions, depending on which one you're claiming on your tax returns. And this holds true on the federal returns and on many state returns. So again, check with your own state as to whether or not these flow through to your state returns or whether they're limited or abbreviated on those. And then we ask whether or not people paid taxes to their state in a prior year, because that can be deductible. And then the bottom of this just asks about estimated taxes for those of you who have to pay as you go. You have a lot of unemployment. There's either no withholding or very little withholding. You have a lot of 1099s and you don't do a lot of, you just have to keep up as you go through the year. So you pay your taxes quarterly. That's for you to keep track of that. And again, this checklist is meant to help you organize. It won't answer all of your questions, certainly, but it's a good place to start to pull all of your information together and not overlook anything. Next slide, please. And here we get into the meat of what many of you are still wondering, what are we going to do with all these expenses? We've got so many show business expenses. These are performing arts professional expenses that heretofore were deductible on your federal and state tax returns as miscellaneous itemized deductions. But what else were they deductible as? They were deductible against, in many cases, not all cases, but in many cases against those 1099s that we talked about before. So what if you do a lot of print work, a lot of books on tape? You sing in your church or your synagogue. You have lots of 1099 income coming from performing what you do. And maybe you direct, maybe you choreograph, maybe you compose, maybe you music direct. It's all in performing arts. And so if you get those 1099s, you can use some or all of these expenses, depending on how the income is generated and what you do, against that income. And I will tell you, in the many, many years and the many, many audits that I have represented members in, the IRS can be very generous about this kind of thing, but they're sticklers about having the substantiation, the proof, the receipts, and the explanations when you go to submit in the event of an audit. If you're not audited, you don't have to jump through all of those hoops, but I always recommend that people prepare their returns as though they are going to be audited. Get all your ducks in a row, put it aside. If nobody ever asks you, good. If they do, good. You pull it out and you're ready to roll. So let's go through these quickly. And I won't tell you what substantiation is required on each one, but I will say generally for all of them, you have to have actual receipts. Credit card statements are not proof of expenditure. I'll say that again. Credit card statements by themselves are not proof of an expenditure for tax audit purposes. And I can tell you that's true federally, and it's true in most of the states that I've had dealings with in audits. And I've done a lot of them. So do not rely on those. And I don't care what, the AD on set told you. I don't care what, somebody told you when you were hanging around, waiting to get back after the lunch break. Don't listen to any of those people. Get your information from tax experts and from your own accountant. They're the best people to get this information from. So let's look at this. Accompanist and audition expense. Are you spending money just to audition? Do you have to rent space? Do you have to rent equipment? I know some of you go into the studios and you pay a fee and you go in and they've got the camera, the tripod, the microphones, the lighting, they've got everything. All you have to do is bring your reader, to turn everything on for you and read the other lines. So if you're one of those people that does that, don't forget to get a receipt for that and include it here. Advertising and publicity. You've got websites, photos, resumes, Showfax, IMDb Pro, Actors Access, casting networks, and all of those places that charge you annually. Keep a copy of those emails that prove your payment. Your agents, commissions, and managers fees. These are very important. And it's easy to get proof from them. They'll provide a letter. Your automobile expenses we'll get to in a bit. Coaching, classes, lessons, voiceovers, dialects, fencing, stunt work, anything that you do that is training for you, whether it's a class you're going to, that you're paying for, whether it's a private coach that you're paying for, make sure that you get a receipt from the person or the organization or the institution that you paid for this class and what it was, or that you paid for this service and what it was. Notice it says no gym memberships. That's because gym memberships are not deductible, not for actors, not for police officers, not for firefighters, not for people in the military, not for any of us, unless you have it written into your contract. And I have seen that in my 40 years of preparing taxes. Did I say 40? Yeah, I did say that. I was very young, I was 12. I have seen it twice where somebody had the presence of mind to build it into the contract that they had to train and keep their BMI at a certain level on their own dime at a gym because they had weigh-ins or they had measurements or something else. Whatever it was, I saw it in the contract and I deducted it for that person and it survived an audit. But without that, don't assume your gym membership is deductible. Equipment, we'll get to, oh yes, so we won't get to it in a minute. We'll go right down to the bottom of the page. The IRS likes equipment and software to be itemized. It's their jam, So you have to list each item, not just a whole lump of, I bought, new microphones, I bought a bunch of GarageBand software, I got a new iPad, laptop, whatever it is. You can't just lump them all together. You have to itemize them. So notice that you have to put the item itself, the date you purchased it, the cost of the item, and include all of your sales tax, shipping, whatever was involved. If the item is used 100% for business, then you don't have to worry about what the personal amount would be or would have been. But if you only have one laptop, then, and you use it for your personal work as well, you're going to have to be able to explain how you arrived at whatever the deduction, your ratio is. And I know that's not easy, but I will just give you a kind of a quick way that I've seen work in audits is to keep a representative log of your use. And what that means is 1 week in each calendar quarter, you kind of track how you're using your equipment. And now if you're doing recorded books, that's 100% stuff. But if you have one phone and you don't have a landline, right? The phone is partially personal, partially business. So you're going to keep track of how you're using your equipment by time. And your phone is actually pretty easy because you can go into a detailed use of in your phone bill online. I've looked at mine many times and said, really, do I call my sister that often? But apparently I do. You can see how you've used your phone, but with your computer and your internet and that sort of thing, just keep a log, and the IRS will say, oh, you've kept a use log? That's great. And they'll take that representative 4 weeks. You'll average it out, what your use was over those, each of those representative weeks, divide by 4, and you have your business use. And you'd be surprised how high it is. Don't guess, just try and figure that out if you can. The next item is gifts for business. Notice it's limited to 25%, excuse me, $25 per individual per year. So if you're sending a gift basket to your agent, send it to the agent's office because there's more than one person there and you'll be able to deduct the full amount. Just a little trick. Your internet or streaming services, again, you want to try and figure out a percent of business use, unless there's something in particular. If you're doing a lot of work in a certain streaming venue, or you're recurring or any of that, you might take that at 100%. But for some of the other kinds of services, take some sort of reasonable professional percent, because they do know that even we are entertained by some of these services. I've been binging on lots of stuff lately. Oh boy, it's been fun. It's been great. Even stuff I've been in, which surprised me. But okay, makeup and hair care. For those of you who do background work, you have to do your own hair and makeup. And you should keep track of the cost that goes into that. So when you have gigs coming up or you're doing regular background work gigs, keep your receipts for the items that you're purchasing that manage your hair care and your makeup. Office supplies, stationery, and postage. We don't really have lots of these over and over, but some casting directors are still asking you to send out postcards. So you might as well, keep track of all of that and how much it costs you to mail. Rental of studio space or equipment. We touched on it a little bit with the audition expense, but you can also put more of that here. If you use studios for practice, for rehearsals, if you're renting equipment for certain things, for certain projects, you're doing a reading and you want to capture it, and you're the one paying the money. You're the one who's going to keep the receipt and be able to deduct it. Repairs and maintenance of your equipment, any special maintenance contracts on your equipment that you're purchasing, especially if it's video equipment, any kind of camera stuff, special lights. I know many of you have the most wonderful complete kits so that you can do self-tapes wherever you are, anywhere. And I'm really impressed by it because I don't have that. I have my husband who tries to help me and we set up as many lights as possible, or I go to a professional and I have it done. But for those of you who have these things, make sure that you also, if you have special insurance or any warranty contracts, that you put that amount here. Research and miscellaneous supplies, just keep the receipts on all this. You collect a lot of stuff over the year and you want to make sure that you're deducting what you use for business. And ask yourself, if I weren't in the business I'm in, would I be buying this? Would I be enrolling in this? Would I be participating in this? Would I be taking this class? Would I belong to this organization? If the answer is no, then it's probably deductible. I have the stage manager supplies kit. That's for your the theater people. They have a whole bunch of expenses that are really exclusive to the work they do. And for those of you who are stage managers, you know who you are and what you buy, and that's all deductible. Tax prep, legal fees, and professional fees, if they're related to business, and I don't mean getting a new will or getting that divorce I talked about earlier, because those are considered personal. But if you are negotiating a contract and you're paying somebody to help you with that, those of you who have managers or managing agents and offices that do that work for you, you know those expenses for those fees are deductible. And certainly if you're paying for tax prep, keep that receipt. Your telephone expense, as I mentioned before, if you have 2 lines, your second one is 100% deductible. I still have a landline. For those of you who have landlines, your cell phone is 100% deductible, no question. For those of you who don't, you're going to have to look through your old bills, the bills that you have, maybe take a 1 month in each calendar quarter and look at your business use, average that out, and you have a really good way of providing a business percentage for your phone. Tickets for research, theater, film, concert, dance, and you can put some of your streaming subscriptions here too if you prefer. Sometimes it's just easier if you've got a subscription to Amazon, Netflix, Hulu, Showtime, HBO, any of those. We all have a few of these, and I tend to throw them down here because it's just easier. Tips and gratuities for anybody who is working, on a set, in the theater. You've got dressers, you've got wig personnel, wardrobe people. It depends on the custom, what's customary in that particular setting, how often you're working with those people. If you just have a one-off, chances are good you're not going to be doing a lot of tipping. But if you're in a play, or you're a recurring character, you're a regular on set, you might be engaging in some of this, some tipping for these people. Keep track of it in your calendar. Make a note as to whom and what it was for and the amount, and that will be considered a cash contribution for which there's no receipt. Let's see, where are we? Trade publications. Most of you have them online by now, I'm assuming, but sometimes some people pick up a hard copy of something or other. Get receipts for everything and save the emails that prove that you made the expenditure, for those of you who have the online subscriptions. Travel expenses we'll get to in a minute. Transportation and transit seeking employment. This is not your automobile. We have a special worksheet for that, which we'll get to, but it is the, for those of you who live in big cities and have public transit, you should keep track of your transit cards, the amounts you're paying for taxis, liveries, cabs, Lyft, Uber, Via, ride shares. Generally, you can get receipts. They always email them to you. They're easy to keep. So keep those. And your calendar will tell you where you were and what the audition or the interview was for, or the go see, or whatever it was. And you'll be able to tie that in with the actual job search, which is always deductible. Let's see, union dues and initiation fees. How could we forget? Well, we didn't forget, of course, it just comes under you alphabetically. So your union dues, of course, are tax deductible, but what about your working dues? Don't forget those. They're very important. They add up. SAG-AFTRA has a nice little worksheet at the end of the year. They always say, add up your income and figure out how much we should be charging you for your dues. And they'll usually show you right on the website what the amount is that they have totaled for you in the SAG-AFTRA jurisdiction. So it's really easy, and it's easy to find, and don't forget to include it. And of course, if you paid initiation fees in the last year, don't forget those either. Wardrobe and cleaning of your wardrobe. If you have to wear your own clothing on set, which many of us have to do now and then, the cleaning of your clothing is deductible. Very often we get a wardrobe allowance, however. So if you get the allowance, you can't deduct the cleaning, because the wardrobe allowance is not taxable. So if you've already been reimbursed, you won't take it twice. But if you haven't, and you're wearing your own clothes and you have to have them dry cleaned, keep that receipt. Otherwise, it's just costumes that are deductible, not your streetwear. So if you're purchasing streetwear for use for auditions, that's not deductible. I'm sorry to say that. A lot of you argue with me, but it's simply not deductible. It's considered streetwear. And no one in the United States is allowed to deduct clothing that is suitable for the street. By that, they mean to go outside your house. So yeah, these days, a lot of us are wearing our pajamas around and we're doing work, but today I'm completely dressed, I'd have you know. Anyway, so now we're going to go to the next slide, and I'm looking at the time. I'm running out of time, or I have run out of time. Have I? I'm not sure, but out-of-town expenses is self-explanatory. Where were you? Put the dates and put all the expenses down that you incurred. Notice it says expenses incurred while working or looking for work requiring an overnight stay. Looking for work is tax deductible. While you're working, if you have expenses out of town, that's tax deductible as well. So I'm not going to spend any more time on this. It's self-explanatory. Keep a good diary and keep track of those expenses. Last slide, please. And I hope I have time. Okay, automobile expenses. This record keeping is the most difficult for anyone to do because it requires, as it says on the top, a contemporaneous log. Well, those of you who might remember any of your Latin know that it means with time. You have to keep a daily, regular log of your driving habits. So there are lots of apps out there that can help you do this. And I can't recommend any of them because I live in New York City and I don't drive a car for business. So, but if I did, I would get these apps and I would ask them to help me catalog my mileage. So you have to include all of the information that's on this for your accountant because it has to be reported on a separate schedule. The year and make and model of your car, when you started using it for business, how many total miles you drove last year, how many of them were going back and forth to a job of some kind, and that includes a showbiz job, and how many of them were for business? Well, what are business miles? It's looking for work locally or out of town. It's working out of town overnight if you've taken your car. It's driving between 2 jobs on the same day. And it's going to class or a course to maintain your current job skills or doing some research. So if you're doing research for a role or you're doing research for a genre that your agent has told you you're going to be submitted for, that driving would be deductible. You can also deduct charitable miles, medical miles, and the parking and tolls that are associated with all of these. I know I've gone through this very quickly and I've invaded the time that I know Rebecca's going to need. So I want to turn this over to our Executive Vice President, Rebecca Damon. And I'm sorry I went over a little bit. I apologize.
Sandra, no apology necessary. Are you kidding me? That was just, it was amazing.
Oh.
When Gabrielle and Cameron, who's here, I want to make sure you get to see her too. Cameron Mannheim, who's our Secretary Treasurer, and I have been talking about ways to better educate and inform members. It's been a difficult time for everybody, and this is a good time to be able to get this kind of education out there. I don't know, Cameron, if you want to say hello to everybody before we jump over to the Q&A. It's so good to have you here with us.
Thank you so much, Rebecca. Sandra, oh my gosh, I'm sorry to have to see you under these circumstances, but I am so grateful to see you, and you are such a guiding light for all of us. We're so lucky to have you and all the, couple decades of information that you have, not that many, to impart to us. And I'm so glad that this will be available for us, all of us, to pass along to our friends who are struggling with these questions. I know everyone is having trouble negotiating all of these little bits of information right now because it's all so new to us. And I really highly recommend everybody pass along the information so that they can listen to Sandra's presentation. Thank you. We continue to try to educate and inform all of our members. And I'm grateful to you, to Rebecca, can I just say this? I just have to say it. I am humbled. I am new to this position, but I have never seen so many fierce women. Sorry, Duncan, talking about you, Pam, you, Rebecca, you, Gabrielle, you, Sandra. Unbelievable. I could not have been taught or counseled by better people. Thank you so much for your service.
Thank you,
Well,
Cameron.
thank you. Thank you, Cameron. And so before we start to the Q&A, I want to just remind everybody of the email address. It's PTEOE@SAG-AFTRA.org. If you have a question, if you haven't submitted one already, we've already got some rolling in. And with that, I am going to turn it over to our Chief Operating Officer and General Counsel, Duncan Crabtree, Ireland. Go ahead, Duncan.
Well, thank you so much, Rebecca. I appreciate that. And Cameron. And of course, Sandra, thank you so much for a great presentation. Really appreciate that. I don't know how you made taxes seem so interesting, but it's clearly a special skill. I have the good fortune of being the sort of moderator of the Q&A. We have a lot of questions that have come into PTEOE@SAG-AFTRA.org, so I'm not going to belabor the point. I'm just going to try and get into it, and we'll get through as many of them with you as we possibly can. And the rest, we will figure out how to get people information on them. But maybe if it's all right, Sandra, I want to start out with a more general question, one of the questions that was sent in, which is the following. How has SAG-AFTRA worked to lobby Congress to address performing artist deductions for agent commissions and union dues? It's frustrating to see Congress provide tax relief for the top 1% while performing artists are left behind. And I know you've been involved with that. Sandra, maybe you can just take a moment to share that, and then we'll get into some more detailed questions.
I'm so glad you asked me that question, because while I know this webinar is not about the Performing Artists Tax Parity Act, which I love because it is the modernization of the Qualified Performing Artists, the QPA provision that's in the Internal Revenue Code. And SAG-AFTRA has been working on this on and off for decades, I will say, because I've been around all that time. I was, you know, part of the initial 1986 QPA initiative. And in the last several years, we have really made a push through SAG-AFTRA's really vigorous legal department and staff and public policy committees, on which I also sit, but thanks to Richard Mazur and all of the committee members, Rebecca, so many have really pushed to modernize and update the Qualified Performing Artist Statute. And we are so proud now. I can't believe it. I mean, I feel in 1986, I gave birth to my baby and the Qualified Performing Artist Statute. And now I can really say that this is my new baby, the Performing Arts Tax Parity Act, that we have sponsors, co-sponsors in Congress right now on both sides of the aisle. And SAG-AFTRA has been pushing with staff, with members, with Gabrielle, with Rebecca, and all of us have been lobbying really fiercely to introduce and to encourage the support of in Congress this bill that will help all of us across the nation by updating the limits, I should say the floors above which we, below which we will qualify to deduct all our expenses. And very briefly, it is that if you are single and your total income does not exceed $100,000, and if you are married and your total income does not exceed $200,000, with the passage of this bill, you'll be able to deduct your show business expenses above the line, which means dollar for dollar against your income. So this loss of the miscellaneous itemized deductions that I referred to earlier today will be not a big problem for us. We won't have to worry about it anymore for those of us who are below those income thresholds. For those of you who are above, there are lots of other advantages in the code that you probably already know about, such as corporations. That's for another day. But thank you, Duncan, for asking me about this. SAG-AFTRA has done really remarkable work in this area, and it has lately partnered with Actors Equity Association and teamed up in an effort in Washington since the passage of the Tax Cuts and Jobs Act that eliminated our deductions. So it's been the last, really year and a half or so that we've just been barreling down to Washington with this idea, and we're so excited. And I hope that it passes soon. That's a big answer.
And thank you for your work on that. And by the way, we do have some questions about corporations, so we're going to get to that in just a second. But yes, I mean, it would be really exciting to see the mid-1980s come into the 20-teens. 2020s. Oh my gosh, 2020s. Yeah.
Yeah.
Okay.
Yeah.
So next, let's get to some more detailed questions. We're going to quiz you a little more intensely. Someone wrote in and asked, is there an income amount that is small enough that it's not worth preparing and filing an out-of-state tax return? For example, from a small residuals payment for a job done years ago in another state. It costs me more to have my tax preparer file than I get back. Is there a rule of thumb?
It's hard to say, and it's kind of subjective too, because for somebody who has $18 withheld by a Wisconsin residual and $22 withheld by a Connecticut residual, and a few more others, those can add up to some people as real money. And for other people, they say, I'll forego it. I don't really care. But that question, as it's posed, says, well, if it's going to cost you $25 to $35 from your preparer to file that tax return, it wouldn't make sense. It just wouldn't make sense. So the other wrinkle in this might be, does the state require you to file? In most cases, in virtually all cases across the country, states don't even require the filing of a tax return if the income is low enough. And in what you're citing now, the examples that you're giving, the incomes are probably so low that the state's not going to be looking for a tax return anyway. So it's really up to the taxpayer. You know, if it's important for you to get that $25 back, and it's only going to cost you $15 to get the tax return prepared, and you're willing to get just $10 out of it, you know, it's really up to you. But in many cases, I see people walk away from them. Yes, all the time.
Gotcha. Okay. So you might imagine there's been a lot of questions about deductions. So, and you've already touched on a lot of them. So some of those questions I'm not gonna do just in the interest of time. But one of the, I think, more interesting questions that's been put in is, so obviously the change in federal tax law that you referenced in 2018 has had an impact on the ability to write off some expenses. And you've also mentioned that in some cases, those expenses can be still deducted on state income tax returns. The question is, if somebody chooses to do that and deduct those expenses on their state income tax returns, could that be a red flag for audit, either at the state or the federal level?
It certainly can be. You know, it depends on, I mean, the federal won't audit it because you're not deducting it federally unless those expenses can be attributed to 1099 income, which is not wage income. So for those of us, and many of us do, file something called a Schedule C. I won't go into the name of the schedule so much as it's that self-employment schedule that probably some of you know about. If you have 1099s, and you've got some showbiz expenses that apply against that, and many do. Sometimes virtually all of them do. It depends on how you've earned the money, how much money it is, and what you spent last year. The IRS can elect to audit you on that schedule if it chooses to. I will tell you this, most of the time, they won't bother you if you have a profit on those schedules. But if you're trying to file losses, negative numbers, you earn $10,000 in 1099s and you want to deduct $15,000 in expenses, you're showing a negative $5,000, that's a red flag. You know, I mean, it can be. Sometimes they'll ignore it, but a lot of times I'll see people who get audit notices for that. In the states, if you claim itemized deductions, because the states are still allowing it, and many of them are, you know, it can be to your advantage to save tax. However, some of those states, I can think of 3 right now, and I won't name them now because, you know, they might stop doing it and some other states might start, but they will give you an audit notice to say, oh, can you prove these deductions, including things like charitable contributions, medical expenses, home mortgage interest and real estate taxes, as well as your show business expenses. And so we are seeing some of that, yes. But if you've got your stuff ready to go, as I've advised you to, you'll pull it out of the drawer and you'll send it all in.
Then you'll be fine. Okay. I mean, you talked quite a bit about the divide between personal expenses and business expenses and how to sort of navigate that. But, and it's funny you mentioned Schedule C because the next question is directly about that question. The question is, let's say that you have both 1099 miscellaneous, so independent contractor, let's say, income, and W-2 income from acting, but you've undertaken many expenses, headshots, for example, that apply to both of those income sources. Can you just choose to attribute those expenses to your Schedule C income and deduct it there, or do you have to somehow allocate it or apply it against those 2 income sources and only take a part of it against your Schedule C income?
That's a really great question. And I've seen this treated in any number of ways, not only by members, but by examiners, by the agents who are auditing. So I will say that it's kind of a subjective call. We have to look at the ratio of, and everything that I'm talking to people about is really on a case-by-case basis. What I'm saying now is general information, but I can't tell you or any of the members exactly what will apply in their situation. So I want to make sure that if you have questions about your particular income and your particular expenses, you get the help of someone who really knows this area well, your own accountant, one of us at VITA, a tax expert somewhere that you want to have a consult with. But generally speaking, we look at the ratio of W-2 versus Schedule C income. And we kind of see how much, and we look at history as well with looking at these expenses. In some cases, we'll put all the expenses on the C because we say, this income comes in on a regular basis. There's a good chunk of it every year. And for print work, for example, headshots are far more important than they are for lots of other W-2 jobs. Are you paying for headshots when you're being submitted electronically? No, you're not. It's digital. It's up on your Actors Access or whatever it is, wherever your agent is sending it from, or wherever you're sending it from as a self-submission. So very often your brand new headshots and the printing of them and all of that could be attributed to the print work that you've been doing. But it's subjective. So I can't say that you shouldn't apportion it. And I can't say that you can always put them all 100% on one schedule or another. I have been before examiners and argued it both ways and won each time. And sometimes
yeah,
it's
but
just
that's
the
you,
examiner.
Sandra.
No, but I mean, no, but sometimes it's just the examiner. You just say, well, listen,
Right.
I need this for this work. And they go, oh, okay, boom. And you've got all the receipts and you're fine. And I've seen some say, well, gee, do you ever apportion this to the other side? And now that we don't have that other side, I think we've got a better argument for putting things against Schedule C. We've got a much better argument now. So I'm eager to get into these new audits. I haven't had a Schedule C audit since the Tax Cuts and Jobs Act. I've had lots of state audits from the itemizing. But boy, I want to go against somebody with Schedule C on this because I think we'll win it. I'm not worried.
That is
Me.
fantastic.
No,
I'd love to be talking to someone who's eager to get into their tax audits.
I love them. Yeah, they're great.
So moving on to a slightly different topic, still deduction related. The question is, does the SAG-AFTRA health plan count as employer-sponsored health insurance for tax purposes? And can I deduct premiums paid for the SAG-AFTRA health plan in my Schedule C business?
That's a great question. We hear that a lot. And yes, they are employer-sponsored health plans. And no, you may not deduct them as self-employment health insurance.
Great. Love that.
Sorry
Very
to say.
definitive answer.
Well, it's the truth. It's a fact.
Okay, next deductions question. What percent, and you actually touched on this a little bit, but maybe, I don't know if you want to say anything more about it. What percentage of your annual cell phone bill can you deduct as expenses? I know you referenced the landline issue. So maybe if somebody doesn't have a landline, you've described methods for calculating that. Any other guidance you want to give on cell phone bills, or do you think we've covered that fully?
I think I pretty much covered it. It's subjective. I think maybe what the member might be looking for is the magic number that applies to all of us. And the only thing I can say is there isn't one. However, I will say that what we see most of the time at VITA and what I've seen privately is that the percentages seem to land somewhere between 60 and 80%. I can't tell you that that's any kind of a number that you should run off and use on your tax returns, but that if you take the time to either go through your cell phone bills and see all the itemization, and you don't find my sister's number there 100 times, that you don't make a lot of personal calls. No, but you can add them up that way and say, oh, I do use my cell phone most of your data plan is, I'd say 100% deductible. I would always take 100% of data plan, but nowadays everything's in one bill.
Yes,
You don't separate it out. No.
Yeah.
So, so I would look at my bills and kind of get a rough idea from those. And it's going to be different for every member, but there is no magic number.
Okay. This next one I find particularly fun because well, you'll hear it, and it's an interesting question what the interpretation of the question is. But the question is, what about meals, transportation, excursions, and hotels used as shoot locations for social media photo shoots while traveling? What notes do I write on such receipts for tax purposes in case of audit? So obviously, one way of interpreting this is someone is working or whatever else, and they're going to do these things. I'm interpreting this question to mean this person is going on trips for the sole purpose of taking social media photos and posting them, and wants to know, can they deduct all of their meals, transportation, excursions, and hotels if they do social media photo shoots, and that's part of their marketing of themselves, or maybe they're an influencer, so maybe that's their whole gig. What do you think?
Well, I think that's another really interesting question and an interesting look at what is considered, and this is from, lots of tax cases, ordinary and necessary business expenses. If you can make the argument that something is ordinary and necessary to your normal course of conducting business and enhancing your own revenue, then I say go for it, because you're the one who has to make the argument. You're the one who has to show the screenshots, the locations, the kind of work you do, the way you advertise yourself, your website, and everything else to the examiner. You can't just say, well, you have to take my word for it, Madam Examiner, that I need to do all this on social media to enhance my show business career. However, if you are an influencer, if you do have a blog, if it enhances your revenue and your visibility in other ways, or directly, either directly or indirectly, I should say, then I think you can make the case that some of these excursions, or maybe all of them, depending on how much you do and how much you're spending, are ordinary and necessary business expenses. For some people, they take an excursion and they just want to concoct a reason to deduct it. And, I say you're going at it backwards. You really have to find the niche where you're functioning, that it's part of your business routine and it's part of what you need to do. Ordinary and necessary are the two key words. Then I would say make your argument and save those expenses and deduct them.
Great. Then we got some questions about more close to home travel, shall we say, something a little bit less exotic travel. So
Local, yeah.
First of them is, if I'm traveling from rehearsal to audition on the subway, can I write that off?
Rehearsal to audition, yes.
Okay.
Yeah, because you're going to seek employment. Doesn't have to be from your home. It can be from a job that you have. You could be working, in a restaurant and you have to leave to go to an audition. Yes. Any transportation to seek employment is tax deductible.
Great. And so here's another example, I think, where the answer is probably going to be the same, but which is, if I travel 300 miles from my home to a national market every week to look for acting work or go to auditions, can I deduct those miles?
Yes, if you are seeking employment. Keep really good track, keep a good calendar log, keep track of all of the places that you went, the people you saw, whether it's a go see, an interview, an audition, a casting office, your union hall, you stopped in the union to look at postings, network with people. Make sure that you have all of that in your calendar and any other information that you can get to prove whom you saw or what you did. But yes, if you're looking for work, yes.
Great. So now shifting topics from deductions, we've had a number of people wanting to talk to you about loan outs, loan out corporations, or other ways of structuring their work to gain tax benefits. So here's the first question is, can you discuss how the new tax laws make it better or worse for actors, and should they consider having a loan out now more than ever because of the new tax laws? What are the pros and cons? To just add to that question, should the loan out be made in a different state outside of California? This questioner is saying, to help with taxes. And then she mentions that she made her loan out in Texas, but because she lives in California, she's not seeing the benefit because she's still working in California and has to pay the California taxes anyway, even though she created her loan out in Texas. So she's hoping that you could, or he or she is hoping that you could discuss those pros and cons.
Okay, well, it's a lot of information to discuss in a forum like this, but I'll certainly give you general overlay of all of this, because I have discussed this with a lot of people, a lot of times, in a lot of different fora since the enactment of this, of the new tax bill. Yes, it has harmed a lot of people, which is why our efforts in Washington are ever more important than they have been in decades. We have lost our miscellaneous itemized deductions. And for those of us who are sort of ordinary blokes, you know, minding our own business, going along and earning middle-class income, leading a middle-class life, it was an even bigger blow because we don't have that itemization place to put our expenses. And if we don't have the self-employment area, the 1099 stuff, that bucket of earnings, we don't have a place to deduct those expenses at all, except maybe in our home state. And then if our home state doesn't give us any relief, what are we going to do with this 10 to 30% of our gross income that we're spending every year on show business expenses? So people are saying, well, gee, you know, people who have corporations get to deduct it dollar for dollar against the revenue that flows through the corporation. Why can't I do that? The short answer is you can do that. The problem you might encounter is that corporations take care and feeding, and that care and feeding can be expensive. You know, you're funneling all of your income through the corporation. You have to have agreements with the employers that you have. First of all, that you're allowed to do that. And as you know, in most cases, those employers will allow you to do that. But then how do you get that money out of the corporation? Well, you have to take payroll. You have to make yourself an employee. So you've got to set up a payroll arrangement of some kind. Most people use a professional payroll company, which is the smart thing to do because they're in compliance and they'll do it perfectly for you. But it costs extra money to do that. So you've spent money to set up your corporation. You've spent money to take payroll out of your corporation. You're going to spend extra money in payroll taxes and some insurances. And then you're going to have to issue yourself a check if you want to be paid. You say, wait a minute, it's my corporation. Why can't I just take the money out of it? Well, because the arrangement that we have all made in this country around work is that unless otherwise noted, we are employees. And if somebody is setting up a business, it cannot be for the purpose of avoiding payroll taxes. So we agree that we are employees of our businesses. And to be an employee, you can't just write a check to yourself for, you know, $1,000 or $5,000 to pay your rent or whatever it is without taking it as an employee through payroll. So it'd be the same as if you went to work for somebody else and you got that check. There's a gross amount and there's a net amount because you've got to pay those taxes. And those come out of your corporation as well. So the whole thing seems to be a rather complicated and costly enterprise for people who don't have the means to pay all that extra money. So where do we say this cutoff is? People say, well, who gets to do this and who doesn't get to do this? And what if I just want to do it? If you want to do it, you certainly may. I would advise that you consult an expert, someone who is probably a tax attorney who can structure the best entity for you and give you the advice about how you pay your taxes through it and what the ramifications are, both on the federal level and on the state level. If that person is not an accountant, you want to be talking with an accountant at the same time to make sure that you're doing everything in compliance and paying your taxes properly. Where is this cutoff? It's kind of, again, it's, you know, it's sort of it's not a mythical number, but what we have found is that people who are earning somewhere between $100,000 and $150,000 every year, you know, on a fairly regular basis, are the people who should be thinking about forming what is called the loan out. Why is it called a loan out corporation? Because the talent is being lent to the payer, the employer. So you're hired to do a gig, you show up, the employer is borrowing your services as a performer through your corporation. It's a loan out vehicle. I know that a lot of you probably don't care what that means, but some people have asked us, what's being loaned? What's being lent? Well, it's your services. So that's roughly how that's set up. If you feel that you want to maintain, set up and maintain a corporation for earnings every year for less than $100,000, you might find that the tax savings does not equal the amount that you're paying in other fees and other tax obligations. And as Duncan has just mentioned with this member's question, regardless of the state in which you work, there will be taxes owed. Now, I can't say in every single state there will be taxes paid on a corporate level. Again, you have to check with your own state. You have to check with a tax expert who, can give you more advice and better advice about the state in which you're working. But I know a lot of people say, well, if I set this up in Delaware, or if I set it up in Tennessee or some other place, Florida, Texas, Alaska, whatever, then I won't have to pay any state corporate tax. Well, no. These people find out very, very quickly that if they do business in a state that enacts a corporate tax, even for a non-resident corporation, the tax obligation is due and payable upon the completion of the tax period for which you're filing. And these loan out corporations are typically, they have to be, if they're S corporations, they have to be calendar year, January 1st through December 31st. If they are C corporations, they may elect some other fiscal year. I know I'm getting into the weeds here a little bit, Duncan, but these threshold numbers are important for people to talk with experts about. If you're hitting that $100,000 number every year and you feel that this might benefit you, you might be one of those people who will have a tax savings that will be greater than the amount of money that it'll cost you to handle the care and feeding of a corporate entity. All right. I hope that helps.
No, I think that's
it's not too complicated.
No, it's a great topic and probably one we should talk more about later. But I would just note, I think one other factor in that is what state you're working in and what state you reside in, because the point was made in this question that in California to create an entity, whether it's an S corp or an LLC, you're going to have to pay a minimum $800 a year franchise tax. That's on top of all the employer taxes and other things you mentioned. So if you are working in California, or if you live in California and you think that incorporating elsewhere is going to avoid that, it just doesn't work, because when you start receiving that income in California, they're on top of that. They know that you're going to get dinged for that. But if the state, if California, for example, were to reduce that minimum franchise tax, I think this is something hopefully we'll see happening at some point in the future, to make that more flexible option for people, especially individuals who are basically trying to deal with the consequences of this federal change in federal tax law. Then I guess the point I'm making is how that applies depends a lot on where you work. And if you happen to work mainly in a state where there isn't that kind of situation, then the threshold might be lower. But if you're in a state like California, where there's that tax that adds on top, you've got to save enough money from doing this. You got to get enough deductions to pay for that $800 tax minimum on top of the other ones that you were mentioning, Sandra. It's an interesting.
Many cities have their own, many states and many cities have their own overlay of taxes. Philadelphia, New York, lots of states in Ohio, Pennsylvania, certainly California. The state of Washington has no personal income tax, but they've got a big ding on state-sourced money for business. So if you're earning money, even if you have a client in California, in Florida, who works in the state of Washington and pays an enormous amount of money for the business income she earns there. So,
wow.
So you have to just get the information first.
I know we're running long, and I appreciate your sticking around. We just have a couple more questions I think we can get to. One is very specific about loan out, so I wanted to throw it out there and see if you have any thoughts on it, which is, when you are working through a loan out company, are your agent commission payments deductible? And if so, where do you put that on your 1120S?
Oh, well, yes, they are deductible fully. 100%. And you can put them, under other expenses. I mean, there's a statement, usually a separate statement or a separate form that you include with the 1120S that will list all kinds of expenses for which there are no specific categories on the 1120S. So they're usually under the other business expenses category. But that's where they would go, and they're 100% deductible. Yeah.
Well, we have such an interesting and unique industry. So here's the next one. It's about child performers, which is number one, are Coogan payments considered income if your child is not yet 18? So by Coogan payments, I assume they mean the portion of the child's income that is sent into the blocked trust under the laws in states that have Coogan type laws. And the second part of that question is the total amount deposited included in your loan out corporation's profit amount and split between shareholders?
All right, I'll get to the second question in a second. The Coogan payments are payments for the services that the child has rendered and are normal taxable income reported either if the child has a corporation, either through the child's corporation, if they come in that form, or on the regular W-2 form, which is what we see until children get big enough, as it were, to have this separate entity. But
so the fact that you can't get to the money doesn't mean it's not income.
Right. The money is protected, however, through the Coogan Trust for the child's. And, you can imagine how this came about. That somebody took all the kids' money at once upon a time, and somebody else came up with the idea, we better protect children's money by putting it in a safe place. However, the taxes are paid on it, and then it will come out, tax-free for the child. That's my understanding of it. If I find out anything different about that, I don't know that those rules have changed. I'll let you know.
Great.
Oh, and then the second question, you have to ask me again, because
Sure.
I was a little confused.
It's a bit of a complicated question. So the question is the total amount deposited, and I assume by that they mean including the Coogan amount, included in your loan out company's profit amount and split between shareholders?
The amount deposited. Okay, so if it's
So I think they're asking
it's
sort of
coming
the same
in.
question, which is it taxable? And then do you pretend like you I guess maybe in this scenario there's some sort of joint ownership of the loan out that the child is working through, which raises its own interesting other questions. To me, this feels like maybe this is more a technical like business lawyer formation question, because if you've got multiple owners claiming on the child's income,
Right.
that may depend on how that's set up. I mean, I don't know. That's my immediate reaction. I don't know what your thoughts are.
Yeah, no, there's more than one shareholder involved in this entity, and so I don't know what the entity is for and how it's supposed to function. I mean, if it's a sort of a show business entity for a family, perhaps, or maybe several children, 2 or 3 children, maybe, or maybe the parents are in show business as well, and they have a family corporation, and everybody's money goes in. I would say then that would be in a formation question with whoever is setting it up, because I would think that the percentages of ownership, profits and losses would have to be amended now and then in the operating agreement or in the corporation bylaws to reflect who's earning the money. So I would say, that I couldn't answer that question myself, and because I don't know enough about the situation. But suffice it to say, you'd have to go back to the formation documents to find out what income and losses are attributable to whom and who owns what percentage.
And if someone's setting that up, they should definitely use care, especially in the state of California, because there are labor code provisions about who's entitled to the earnings of minor performers in particular. When young people under 18 earn income in the entertainment industry, they have special rules about who's got entitlement to those earnings. And so yes, and I'm certainly not expert in that area. I always refer people out to friends of mine who work in entertainment law and accounting, who have the dual legal and accounting licenses, because they will be the best experts in this area. I'm certainly not. Well, I have a couple more questions about VITA that I just wanted to get to. The first one I just have to read. Sandra, because apparently it's someone that's knows you personally.
Oh.
The question is, I have been incredibly lucky enough to have had you personally prepare my taxes in the past, Sandra, as well as many of the other utterly wonderful volunteers at VITA. I have always known how lucky I was to have you all help me, save me. And I realize that even more so this year, now that I find myself having to file by myself for the first time. I do not understand the tax return or know how to begin to possibly fill it in. Can you advise how I make the transition from someone doing it for me to having to wield it myself? I'm also a dual citizen and I have a tiny income in the UK as well as income here, so it is complicated. I cannot afford an accountant, of course. What on earth can I do? Thank you as ever from the bottom of my heart for your assistance.
Oh, well, I'm so happy that you have availed yourself of VITA so much, because we're always so happy to help members, and, you know, we help each other. That's really, we educate each other. So it's, you know, it's just a great thing. And I'm happy that SAG-AFTRA and Equity support it with as much support as we get. You know, I don't know if you are trying to do your own tax return because you have foreign income and you couldn't come back to VITA or not. But I would say, don't be afraid to jump in and do this. And as I said earlier today, you can amend your return if you think that you might have made a mistake or you just didn't do it artfully enough to get the best benefit out of it. When you have time and when this pandemic sheltering at home has been lifted, you can seek the advice of not only those of us at VITA, but you know, any professionals as to how you might go about it. I understand that money can be an object in many cases, and I sympathize, but maybe just a consultation with someone can set you straight if you can't avail yourself of getting to a VITA office. Feel free to ask me and to send an email to PTEOE@SAGAFTRA.org. And if I can do some research for you, help you in getting an answer back to you through SAG-AFTRA, I'm happy to do that, because I don't want you to feel that you're just adrift by yourself. You know, maybe I can get you some better information if I know more about you. So,
well, thank you for that, Sandra. We got a number of questions from people who stated that they had appointments with VITA or whatever, and due to the pandemic, those appointments had to be canceled. Do you know, will people be able to make new appointments with VITA or schedule some kind of online consultation, or is there a way for people to get assistance from VITA under the current circumstances?
well, I will tell you all that we at VITA are, you know, feeling just as bereft as the rest of you, because not only can't we leave our houses, but, you know, many of us really have been itching to get back into the VITA office and do some work. While I can't predict exactly when that's going to be, I know that we are open, as you know, all year long. We are going to pick up where we left off. I mean, that really, as soon as we can get back into the office, we're going to have as many regular weeks as we can get volunteers for. We're going to be honoring the people whose appointments we could not see because of when we had to close the doors due to the virus epidemic. And we'll get people in as quickly as we can, as many as we can before the July 15th deadline. When we're going to be able to start, I don't know. You know, New York State, which is where our VITA office is located, has as May 15th its date to kind of reopen, but now they are doing it sort of on a rolling schedule with different kinds of services, different areas of the state, and so on. So we don't know exactly when we're going to be able to go back into the office when it's safe to do so. The building we're located in is the Actors Equity building, and they are all working from home. So until they start to come back in, we're not going to be you know, going back into the VITA office anytime soon. But it could be, you know, within a month, we could be back there. So as soon as we're back, there will be announcements made. We will take everybody as they were scheduled, we hope, as we can get them in. And we're going to honor those appointments first and just do the best we can. And we will operate year round. So we're going to try and get people in even after the deadline of July 15th. We're going to continue to see people for the rest of the year. If you think that you won't be seen for some reason, or you're worried about it, or you're traveling, you're on the road, or whatever it is, or you have, familial obligations outside, and you won't be able to make it in, file an extension for yourself for both federal and your home state, and come back and see us when you can. And we'll be there. We'll see as many people as we can. But get an extension in so that you don't have any penalties on late filing.
Wow, that's great advice, and it's good to know that as soon as possible, VITA will be available to people again.
Yeah.
I'm sure you'll
We're
have
going to get back
a
there as
lot
soon
of
as we can.
Thank you so much, Sandra, for doing this presentation. I mean, I've learned a lot, and I'm sure everyone who watched, the more than 1,000 people who watched online the entire time learned a lot from it as well. And thank you to you and all of the people who volunteer at VITA. It's been an amazing support and service to people for a long time, and especially right now, it's clear a lot of people really appreciate the kind of guidance and support that you provide them. So thank you. I'm going to turn it back over to Rebecca Damon to
We appreciate you.
But thank you, Sandra. I appreciate it. Rebecca?
Thank you, Sandra and Duncan. Oh my gosh, that Q&A was great. Having seen this seminar before, having it in the middle of this pandemic is really, truly meaningful to all of us who are staying at home, staying safe, wearing our masks, thinking about taxes. I want folks to know that they can go, some of the worksheets that were on the screen, they're available on the SAG-AFTRA website. The link to that is sagaftra.org/2019 tax resources with an S on the end. And that link will also be in the YouTube video that will be posted after this. So you'll be able to go and find that link if you forget it later. I'd also like now to have everybody make sure that they've also subscribed to the SAG-AFTRA YouTube channel. It helps you know when there's other things that you might have missed. We're doing more of these. We want to stay connected during this really tough time. So we want to make sure that you know where to go. So subscribe, tell your friends to subscribe, do what Cameron said, send the link around. So you're going to do that. I'm also going to ask you to make sure that you are following your union on social media. So that's SAG-AFTRA on Facebook, Twitter, and Instagram to make sure that you are always finding out about the different things we offer. Check your email boxes. Again, Sandra, what a fantastic presentation. And Duncan, thanks for helping facilitate today. This was really a wonderful seminar, and I want to thank everybody for being here on behalf of the President's Task Force on Education, Outreach, and Engagement. Thank you very much, and we'll see you next time. Stay safe.
Thank you very much.
Thanks, Sandra.
Thanks, Sandra.
My pleasure. Thanks to all of you.